And I think it's really important to understand that when the system starts to deleverage, the asset that underlies that entire system rises in price. And the asset that underlies our entire system is the US dollar.
Hi folks, Wealthion founder Adam Taggart here with a special update for you regarding the fluid situation currently going on in Ukraine. With the world issuing new economic sanctions on Russia following its current military incursion in Ukraine, the value of the Russian ruble as measured in dollars is plunging. News reports abound of Russians scrambling to exchange their money for dollars, though Russian authorities are putting measures in place now to thwart that. We're fortunate to be joined briefly here today by Brent Johnson, fund manager at Santiago Capital, who's well known for his Dollar Milkshake Theory, which predicts that as instability and crisis occurs across the world, it will drive demand higher for the US dollar. And we appear to be seeing that play out in real time right now. Brent, thank you so much for taking time out of what must be a very busy trading day to help us make sense of the very fluid situation unfolding before us right now.
Happy to be here. Thanks for the invite.
Hey, no worries, Brent. All right, so basically I just want to use this as an opportunity to shine a bright light on the drum that you've been banging for a long time, especially for most folks that think that the dollar's better days are behind it. Is that don't underestimate that when things get rocky in the rest of the world, there's all of a sudden a surprising and strong demand for dollars. And we seem to be seeing that play out right now in real time in Russia. What are your take on it?
Yeah, I think today is probably a good day to kind of highlight some of the things that I've been talking about. To your point, I think there's this kind of narrative or this idea out there that the dollar's best days are behind it. And that could be true. Maybe the dollar's best days are behind it. And maybe there's plans to kind of come up with a new system that doesn't need dollars. But as it stands right now today, if you want to operate on the global stage, you need dollars. And you don't have to like it, but it's really important that you understand it. And I think over the last couple of years, especially as China and Russia and maybe some other states have made strides to kind of get out under the thumb of the United States and the dollar system. There's this idea that they are no longer, beholden to it, and that they are now immune to anything that the U.S. throws at them. And I think today we're seeing that that's just not the case. There's also an idea out there that the U.S. could no longer build a coalition of willing partners to help them sanction a country like Russia or China. But we've got countries all over the world now jumping on board with the United States. Even Switzerland, who's always been neutral, has come out and talked about freezing Russian assets. So, I think it's important to understand that, I don't know what's going to happen if this continues to spiral into a crisis. Perhaps the dollar will fall. But what I do know is that every time over the last 25 years a crisis has happened, the dollar has gotten stronger. And I don't think the system has changed in the last 25 years. I don't think it's different this time. And I think it's really important to understand that when the system starts to deleverage, the asset that underlies that entire system rises in price. And the asset that underlies our entire system is the US dollar. And again, you don't have to like it. You don't have to love it. You don't have to agree that it should be that way. It's just really important to understand that it is that way. And if you're investing, you need to keep that in mind as you're allocating your portfolio.
All right. I've got a number of questions for you. I know we got a short period of time here, so we'll just take this as rapid fire round if we have to. Okay. So world still demands dollars when it gets into trouble. Let's talk about trouble for a second here. So the world, as you just mentioned, has basically slammed a bunch of sanctions down on Russia right now. And whether you agree with the reasons for doing that or not, the global financial system is hyper-connected, and there is dependency out there in the world on capital flows from Russia, especially just overnight lending that Russia's been doing in the market to the tune of hundreds of billions of dollars, overnight. So you're going to disrupt those flows. And my question is do you worry about any type of contagion that we really might not be able to predict exactly all the forms that might take at this point in time as we just sort of, sever those nodes. But is there a risk here that these sanctions actually create, some cascading effects that impact the rest of the world in deleterious ways that we just might not be expecting right now?
No question. Absolutely. There's definitely a risk of contagion here. And again, I'll say, I don't know that there's going to be contagion. All I know is that the system is set up in a way, and the economic situation today is such that if some kind of an unexpected or unmanageable event happens, we're set up for a disaster, just like we were in 2020. Again, in 2020, I didn't know that there was going to be a pandemic. The lowest thing on my list of potential catalysts was probably a virus. I just knew that we were set up in a way that if an unknown catalyst did come along, it could cause a lot of problems. And I see that same thing again today. There's no doubt that the system is interconnected. It's really, really hard to have something like a war or a military confrontation or some kind of a sanctions on one country that won't have knock-on effects somewhere else. And I think when a lot of people have heard me talk about my thesis that the dollar will get stronger, that the U.S. will be a safe haven and a kind of a port of last resort, I don't want people to think that I think that the U.S. is immune to these problems and that they are immune to getting hurt. I think everybody will get hurt in a crisis. It's just a matter of who survives and who is in the best shape coming out of the crisis. There's no doubt that Putin has kind of planned for some of these contingencies. I don't think that these sanctions that have been put on him are a huge shock to him. So he no doubt has some counter moves planned that will no doubt cause some bit of pain on our side. Now, what level of pain? I don't know. I think he probably has some pretty good ideas of ways to cause us more pain than we would otherwise like to believe. But I just believe that on an overall basis, the US and the Western world will be able to handle them better than Russia or some of the other countries.
Okay, great. And folks, you're hearing a buzzing in the background there. That's why Brent's wearing the headphones. There's some construction going on in the building that he's in. But that's just a small price to pay to be able to talk to him briefly on this day where things are moving so fluidly here. All right, Brent, just because you do seem to have a lot of concern that the system is sort of primed for vulnerability to some sort of cascade at some part, whether it's triggered by Russia or whatnot. Just real quickly, should indeed that happen, should indeed we lead to some sort of crisis like we had in 2020 or like we had in 2008, either how are you positioning for that right now, or at least what sort of assets do you think are good assets for people to consider in that type of future? I would assume some cash. I would assume maybe long dated US treasuries, but don't want to put words in your mouth. Yeah. What are the types of assets to own to protect against that type of risk?
Well, I think, and I've been saying this for years now, I think the two most important assets you can own is US dollars and gold. I mean, I'll go to war with those two things. And I shouldn't actually, that's a bad phrase to use right now, because there's actually people fighting a real war. And, the problems I have are minuscule compared to what they're dealing with. So, but the point I would make is those are the two most important assets. I would start every portfolio with dollars and gold, because I think if you have those two things, you're going to be able to get through this crisis. And again, the most important thing is just surviving. Now, how well you look coming out the other side is kind of secondary, but the most important thing is just to get to the other side. Now, after you've got those two things in your portfolio, then I think that you can have things like, I don't have long-term treasury bonds. I think that they probably will rise, but I'm not sure. And so I've kept any treasuries we have kind of short to medium length. But I think owning large blue chip US equities in a portion of your portfolio is a good idea, because I think they will become the new treasuries. I think as we enter a sovereign debt crisis and interest rates start to rise because nobody believes these countries are going to be able to pay off their debts, I think US large blue chip stocks will become kind of a replacement for sovereign bonds. Now, I know that sounds a little ridiculous, but I just kind of think that that's probably what's going to happen. We've got a number in our portfolios, and I'm not recommending that people do this, but we've got a number of positions in our portfolios that should benefit if stuff like this happens. As an example, we've been short Russian equities. We covered most of those today because we think there's probably going to be a relief rally here over the next couple of days, but that doesn't mean I think the crisis is over. If we do get a bounce in Russian equities, I may very well short them again. But we've got a number of these asymmetric plays because we think as crises develop, we think the dollar will get stronger. And we think when the dollar gets stronger, it breaks a bunch of things. And a lot of these things that you don't think could happen could actually happen. So we're short a number of different currencies. We're short some different commodities. We're long some assets as well. We think that you should own gold. We think you should have cash. We think you should own equities, large cap blue chip US equities. But I think the most important thing is to just be nimble. Don't be married to any one idea. And don't try to trade these headlines. That's the other thing I should say. It's really, really hard to trade in a normal environment. It's almost impossible to trade well in a geopolitical headline-driven market unless you have some kind of an edge. Now, I happen to think we have a little bit of an edge, but if you don't feel like you have an edge, don't trade it. Don't try to trade these headlines because you'll get cut to ribbons.
All right. I think that last point is very good advice for the average investor watching this. If you don't have a professional edge here, don't get yourself into trouble here trying to understand this a system that is incredibly complex. One question about the blue chip US equities. I assume you're talking about ones that have like really good balance sheets and basically are just in better position than a lot of other corporations out there. I mean, there's a lot of highly leveraged corporations out there that I assume you would say don't touch. Right. And you're sort of comparing them to, I mean, Apple's balance sheet, basically is better than a lot of countries right now.
Yeah.
Right.
Yeah, no, exactly. I'm just going to make up some names here because I'm not, this is not advice, but, names like Coca-Cola, like John Deere, like Apple, like Microsoft, like Lockheed Martin, Philip Morris, these big blue chip battleship type companies that are not going to go bankrupt in a recession. You really just want to, again, the main goal here is to survive and advance. There's no kind of pictures on a scoreboard. They say, you just want to win. You just want to make it to the next round. And, surviving is a big part of that. And one thing I would say is if you keep cash in your portfolio, I know because we're in an inflationary environment, a lot of people don't want to keep cash in their portfolio. It's a drag, and I get it. But what it does do is it allows you to sleep at night. If you had some cash in your portfolio, perhaps last night wasn't as sleepless for you as it was for some other people. And then you can go in and you can do some short-term tactical trades. If you've got a bunch of cash, when there's a big down day in the market, you don't have to go sell anything because you've already got your cash. And you can, in fact, if you think you have an edge somewhere, if you see something that's mispriced, you can go in there and buy that because you've already got the cash. But if you have to raise cash to do it becomes really, really hard. So keep some cash in your portfolio despite the inflationary drag on it. Don't think of it that way. Just think of it as free optionality or low cost optionality that'll allow you to be a little bit more nimble in some of these crazy markets.
Great. Thanks for reinforcing that. We've had a number of guests sort of talk about the optionality of cash in recent weeks on this program, and I think the past couple of days have really underscored the value of it. I think those that have had that dry powder, to your point, have slept really well with the market uncertainty and gyrations that we've had here. Lots of questions for you, but I'm going to limit myself to two because I know you got to go, Brent. So one is, on the day we're talking, the markets opened down a lot. This is almost sort of looking like a replay of last Wednesday, Thursday, where Russia invaded, the futures went deeply red. They opened down, but then they ferociously came back and closed very green. We haven't necessarily gotten to closing green yet today, but we've certainly made up a lot of the uncertainty that built up over the weekend. And similar, we saw gold take off both the night Russia invaded and both over this weekend with all the developments, and it's come back down again. So I'm just curious if you have an opinion on, if you had just looked at the market a week ago and then looked at it right today, you wouldn't think much had happened, right? Why are things remaining so resilient, robust, or whatever in these markets?
Well, I think maybe one of the hardest things for let's just call it the retail crowd, for lack of a better word, or the non-professional investor to understand is how can the market not just be completely crashing, right? We've got war. It's between the United States and Russia, the two superpowers. This is going to cascade and become the worst thing ever. And it might. I don't know. Maybe it will. But let me give you an example. Last week, when the market was down tremendously, it was down on expectations for full, combat actions between the United States and Russia, boots on the ground. And when markets are anticipating that, in order for them to go lower, you actually need to have boots on the ground happen. In other words, for markets to continue trading down, you need to have have a continuation of news that is even worse than the previous set of headlines, right? And so if you don't get that next set of headlines that escalates the situation, then maybe it's mispriced. And the absence of additional negative effects will actually lift the markets. And so again, I think that kind of same thing again happened overnight, expecting, huge market ramifications because Russia was kicked out of SWIFT and a lot of uncertainty. But as markets are down, don't get me wrong, this is a risk off day. But, I think a lot of people initially sold because there's just that unknown. But once the unknown starts to becoming more known, then prices start to firm and prices start to rise. Like markets hate uncertainty. And so in order for things to stay uncertain, in order for things to continue down, they need to stay uncertain. The more information you get, the more certainty you get, and then markets will tend to generally rebound from wherever they were. But again, these headlines, it's really, really hard. I mean, it's very possible that we'll have 3 market moves in the next hour. We'll get one headline that says wars raging in Eastern Ukraine. We'll get another one that says they're going to have another talk and they're going to sit down and they're going to come to an agreement. And then an hour later, somebody gets shot at a subway stop. And it's but my point is that you need to have an overall plan. Unless you're a very good, swing trader, you shouldn't even be trying to trade these markets.
All right. Would love to keep pulling that thread, but can't. And I just want to remind folks that Brent is a capital manager. So, everything that he's saying isn't just an opinion. He actually has to put it all into practice with the capital that he's managing here. So, I think that gives his words extra weight. Last question for you here, Brent. Yeah. Do you think there's been movement afoot over the past number of years by a number of countries, Russia and China being 2 big ones, to start settling trade in currencies other than dollars? Do you think the fact that, they're being kicked out of SWIFT and all these sanctions are now hitting with Russia, could this be kind of a catalytical moment to try to accelerate some of those players to try to, advance those relationships? And could this advance de-dollarization around the world?
I think the best way for me to answer that is to say yes, but don't get carried away. And what I mean by that is yes, when other countries see what has been done to Russia, it's going to make them think twice, right? It's a signal. This could happen to me as well. When people around the world look and see what happened in Canada a week ago, you're like, wow, that's a signal. That could happen to me. So I'm not minimizing it, but just because there's a signal, and just because perhaps the initiative or the inclination to do something about it is now higher than it was a week ago, it doesn't necessarily mean we're going to wake up tomorrow and the dollar is going to be crashing in the ruble and the yuan or the new world currency. This stuff takes a long, long time. And I think there's too many people that they come up with a possibility, and in their mind they extrapolate it into a high probability. And those are two. I don't know if you've seen over the last week when they've shown pictures from the Kremlin with Putin meeting with different political leaders, and there's this big long table, and Putin's sitting at one end and the other guy sitting at the other end. Well, that's a good analogy here. Just because it's possible they're going to walk in and shake hands, there's a big distance between them, right? So just because it's possible that the world is going to set up a competing system to SWIFT doesn't mean it's going to happen tomorrow morning. I mean, SWIFT is, and if today's price action on the ruble and the Russian stock market don't convince you of that, I don't think anything ever will. The ruble's down 50%. The Russian stock market is closed. That is not because Russia is in a superior position to the SWIFT system. Okay, I get it that, and I feel really I feel really strongly about this because I don't want to offend anybody, but I feel like I just need to hammer this home. Like there's just been this thesis that the U.S. cannot possibly win, and I will agree that we might not, but to say that we cannot possibly win is just, it's ridiculous, right? Like we are still the global superpower. We still have a number of tools that we can use. We have a number of cards that we can play, and to pretend that because we've had a few setbacks along the way that we no longer have a chance, I think is going to be a huge detriment to your portfolio.
All right, great. And thanks for underscoring that.
Yeah.
And I do think that I've seen a lot of it, honestly, in the past week, not just on this topic, but on a number of others where I think because emotions are heightened and things are really picking up speed here, that I see people talking with a certainty about what's going to happen, especially when they're talking about a macro trend.
Yeah.
Like, oh, well, this is what the world's going to be like starting tomorrow. And I think to your point is maybe that macro trend prediction is correct, but a lot of these things take a long time to play out, a long time being years, maybe even decades in certain cases. And maybe in this case, this might be a decadal one. But what I hear you saying is look, it's not going to change the world tomorrow from a de-dollarization standpoint, but this could be a step along the process in getting more of the world, setting up a system.
I think it no doubt is. It no doubt is. Just to keep it in perspective.
All right, great. Keep it. We should take that advice in a lot of areas right now. All right. Well, look, thank you for giving us so much of your time. I've already taken more of it than I said I would. I just want to let folks know that you are commenting a lot right now on Twitter. So if folks have enjoyed your insights right here and they want to keep abreast of what you're thinking as things continue to play out in this very fluid situation, what's your Twitter handle? Where can they go to watch that?
So Twitter is Santiago AU Fund, or you can just type in Santiago Capital. The symbol is a seashell. That's how you'll know it's me. And I comment quite a bit, and I'm often sarcastic. So please don't take everything I say as true gospel. But part of the reason I do this is to help people. I mean, I know that sounds a little cliche and a little funny, but it's true. Like I want people to survive this. I want people to get through it. It's a crazy, crazy time. And the most important thing is just to get to the other side.
All right, great. Well, again, I appreciate you taking time out to come here and help people do that. When we edit this, I will put up the URL for your Twitter handle there. All right, folks, if you enjoy us being able to bring on great guests like this in a very timely manner, do us a favor, support this channel by hitting the like button and then clicking the red subscribe button below, as well as that little bell icon right next to it. Brent, thank you so much again for joining us. Everybody else, thanks for watching.
Yes.